In recent years, the world has been grappling with the effects of global warming on our planet. From stronger hurricane winds and heavier rainstorms to widespread wildfires and unusual winter tornadoes, all of these changes are having a dramatic impact on our environment and communities, and now on our housing market. The United Nations Intergovernmental Panel on Climate Change (IPCC) has documented the damaging effects of global warming on the Earth's ecosystems, and according to a recently published study in the journal Nature Climate Change, these changes could be having a significant effect on the nearly $12 trillion mortgage market in the U.S. At risk are an estimated 62 million U.S. homes exposed to the dangers of flooding, fire and wind due to the effects of climate change. That could mean an overvaluation of $200 billion in the U.S. housing market. One of the largest mortgage holders in the country, Fannie Mae, could be facing a large portion of this risk, so they are taking a proactive approach in attempting to understand and quantify the risk associated with climate-related disasters. Tim Judge, the Chief Climate Officer at Fannie Mae, is leading the charge to incorporate climate risk into mortgage underwriting. He has been hiring climate risk modeling firms such as First Street Foundation and Jupiter Intelligence, as well as others, to come up with the analytics needed to classify the risk associated with climate. This will allow Fannie Mae to factor climate risk into home values and mortgage underwriting decisions for consumers. As new research has recently found, on the current climate trajectory, the estimated number of U.S. homes significantly impacted by climate-related disasters will increase from less than 1 million in 2030 to over 62 million by 2050. But to date, mortgage underwriting does not account for climate risk, and Fannie Mae is not yet rejecting any mortgages solely based on the potential risk from climatic upheavals. As Christy Fairshow, head of mortgage lending at Wells Fargo, and recent chair of the Mortgage Bankers Association stated, "This is a massive challenge for all involved in the industry is evaluating how to factor climate risk into mortgage underwriting. The challenge is to try and accurately assess the risk associated with climate change on an individual property and neighborhood level, as well as on a macroeconomic scale, so that the financial and economic implications can be factored in." Clearly, the changes which have been brought about by global warming will have serious consequences for the U.S. housing market, and action needs to be taken soon to evaluate and protect against the potential risks. The hope is that the work of the climate risk modeling firms, Fannie Mae and other organizations will produce the methods and analytics needed to incorporate climate risk into home values and mortgage underwriting, and ultimately keep families safe from the impact of climate-related disasters.